Hello guys, and welcome to the 97th edition of the Trading Opportunities webinar. This is Nirav, and let me quickly have a look at the microphone and everything at my end before we actually begin with the webinar. For those of you who are actually present right here, and if they can give me a feedback, that will be awesome as well. Looks like we are live on LinkedIn, and let me check the YouTube section as well. So there it is. It looks like we are live on YouTube as well. Let me just check the audio here. Yes, the audio is working fine as well. So yeah, guys, with that being said, let's get started with the actual webinar. And here's a quick disclaimer. Basically, all content presented here is for educational purposes. I'm not soliciting buy or sell. If you do go on to use the views presented here for your trading, investing, or for any other purpose, you yourselves will be liable for your profit, your loss, or loss of profit. Rest of the disclaimer you can read on the screen by pausing the screen, obviously, or visiting 50r.com/disclaimer. Right. With that being said, let's now head over to our first part, which is basically the introduction part. So for those of you who are new here, guys, my name is Nirav. I'm the admin and owner of the website 50eyes.com, as well as the YouTube channel 50 Eyes Market Analysis, where I have been presenting my views for quite some time via these weekly webinars. In this series of weekly webinars, this is the 97th iteration. Keep in mind, guys, we do live broadcast. Okay, I have to increase the text size here. 1 second. So, yeah, as I was saying, we do these live broadcasts on multiple different platforms. How do we increase that thing? Give me a quick few moments here. Let me just check. Hmm. Yes. So as I was saying, we were mentioning about the webinar. We do these webinars and they go live on LinkedIn and YouTube simultaneously. And we go live every Friday at 7:30 p.m. IST or 2 p.m. GMT, right? So in case you are watching it for the first time, you can just hop on live next time and catch these opportunities as we discuss them in live market, right? So these are the timings. Just convert them to whichever time zone you are in. Right. With that being said, what is these webinars? These are called trading opportunities webinars, and what I do discuss in these webinars is basically the outlook of major global markets, basically Euro USD, crude oil, gold, S&P, and Nifty, as well as Bitcoin, of course. We do these webinars at these times, as I just mentioned. Apart from these webinars, I also have a book on Amazon Kindle, which is basically an electronic version of the book. You can grab it by visiting this link or just searching Amazon for the title here, Think with the Markets. Right. I also have a very famous course. I wouldn't know if it's very famous or what, but it has 1500 plus students. And it can also be checked out by you guys, the video course, by going to courses, Elliott Wave course on my website, 50is.com. Right. And with that being said, lastly, I just wanted to check. 1 second. Yes. So last thing I wanted to point out was that I have been keeping a track record of all the analysis that we do here and discuss since 2016. And as you can see, since 2016, we have had an accuracy of 80% plus consecutively. As you can see, 2017, 87.5, 2018, 84 something, 1984 something, 2020, 84, 88 something, and so on and so forth. And these webinars we are tracking on a webinar by webinar basis, the weekly webinars. Right. This is about industry standards. I personally haven't come across anyone with a public track record of 6 consecutive years with such high accuracy. So that's just something I just like to show before moving on with the webinar, just to build the credibility and stuff, because I don't know if you guys are joining in the first time or the 100th time, right? So with that being said, let's now head over to the actual webinar where we will begin with our discussion of, as I just mentioned, just to repeat for those of you joining in, Euro, right, which will be followed by these instruments later on. So let's quickly load up the chart of euro on screen and begin our discussion. There it is, euro. And here we have the chart of euro. I am currently holding a long position on this counter. So we'll discuss why I'm holding a long, etc., as we go along with the analysis. But before we actually get started with the discussion on euro, I would just quickly like to show you guys what we discussed in the last webinar, and then we'll like to move on to the current webinar analysis, right? So here is the YouTube video on the live section. In just in case you guys want to check it for yourselves, just go to the 50 Hours Market Analysis YouTube channel and click on live, because all these are live broadcasts. And 96th one, we want to check what we said on euro. Let's quickly check that. By the way, all these webinars are time stamped. So if you want to check the analysis of a particular instrument, you can just go to that specific instrument. You don't have to waste your time here and there. So here is the analysis for euro. And let me just go full screen here with 1080p settings so that we can have the best view possible. So what I said on euro last time was that we'll look for longs above 1.09863 level. Let me play the video here so that you guys can check that. And the expected pattern, I believe, was impulse up, if not a zigzag up. So basically, we are expecting at least two legs in the other direction. And I'll let this analysis play out for a bit. I'll just speed it up so that if there's anything left to cover, it can be covered. So I guess, yeah, this is basically what the analysis was, as you can see here. Now let's see what happened in live market. So this is the actual chart of euro, and the last discussion, as you guys already know, was done on 5th of January. And yeah, one more interesting thing, guys, in the webinar, I'm pointing out that this may be the end of the leg or the downward movement. As you can see, this is the recording. I'm back to the recording, switched back to the recording tab. So I was pointing out that this may be the end of the recording, end of the move on euro. And the market actually did turn from here. So we were able to pinpoint the reversal level as well. And as well as form a trade setup, which actually worked out. And I'm still holding longs, by the way. So yes, this was the point where I pointed out that this may be the end of the move, right? And the market has then afterwards gone up for a wave, one up and two down, and looks like it will be heading up for a three up. So I am holding longs currently on this counter. The expectancy is that this will go up for an impulse, and even if it's not an impulse, the minimum upside we expect is something like this. I'll just draw it on the rough right hand side. So this is the minimum we are expecting on this counter. That's a wave up, or actually it's we are expecting an impulse of one up, two down, and three up. So even if this analysis is not going to play out precisely as we are expecting it to, we still expect the market to go up for at least this leg as an A up, B down, and C up in a zigzag. So in this case, this will be our one, this will be our two, and this will be our three. Right. So we are expecting this leg to take out this last high, which is currently around 1.09997. Right. And in best case scenario, if the things really do play out as we are expecting them to, then we expect this market to go like this. Right. So basically take out this high as well. So we wouldn't go that far, but from what it looks, as I said already, minimum expectation, this leg up is still there, still existent, right? So long story short, that's the setup on euro. And as I said, I'm already long. Nothing much to discuss here. Only time things will change is if the market goes below this level of 1.09122. So below this, we can say that this market is probably doing something else. This level somewhere here. Basically this low I'm pointing out towards. So below this low, things may be not moving as we are expecting them to be. And at that point in time, we may have to do things differently. I may have to book the loss on the longs which I'm holding. Well, that's about that on this counter. More or less, other than that, it's just hold the longs, trail it, and let the trailing stop loss hit, or if something else happens, let the stop loss hit. So that's about that. Oh, I forgot to turn off this thing. 1 second, guys. Let me just sort some things here. And Sushil, hello, Sushil. How are you doing? And by the way, guys, it's a live webinar. If you are there, you can always say hi. It's always nice to see participation in these things. And let's now head over to our next chart, which will be the chart of CL crude oil, right? Again, crude oil is working out as expected, and at least so far, right? If you guys remember crude oil, last time when we were discussing this chart, I did mention that I have a long position on crude oil, and that long position I am actually still holding. I have booked parts of it, but overall, I am still having some net longs left in the market. So before we move towards that discussion and talk things in further detail, let me just quickly show you what we discussed actually in the last webinar on crude oil. Let's see. So this is the recording from the 96th webinar, as you can see here on the bottom, right? Let's see what we were saying about crude oil. So this is the chart of crude. We are discussing it. This is our point of reference. I'll just let the video play out. Yes, so this was the main discussion. This was the main idea. We were expecting that this market will just go up. We are at a 2 or below here. I had longs. Some stops were placed around 70. Some were at 69 point something, I believe. Right. So I had to later on adjust some of those stops, as I recall the market did give a spike down. But overall, the count remained intact because as long as the market does not cross the last low, theoretically it can still go up for our 3 or C. But let's now head to the actual chart and see things there for more clarity. So here is the actual chart of crude oil. And this was, let me just check the recording once more. Yeah, this is the recording. Yeah, this is the actual chart. So yes, as I was saying, the market has kind of gone up, but not precisely with the same strength as we were expecting it to go up. So let's check what is really happening here. So first of all, the main count here still remains the same. This is still our point of reference. And we still have the 1 up here and the 2, 1 or A, 2 or B here, right? The only thing which I think may be changed here is that it is possible that this 2 may be continuing as a complex structure. Let me check one thing here, 1 second. Actually, it's better to count it as a nested impulse in the upward direction rather than a complex. But anyways, long story short, the count still holds. The upside possibility is still strong, as per my understanding of this counter, and the expectancy minimum is that it will cross out 76 high to the upside. That's the minimum, by the way. The update as per count wise is that it is looking like more and more that we have a nested formation in play here. A wave 1 up here and 2 down here, which is represented by these Roman letters. And then it is possible that this 2 is still continuing here, maybe. So we are still having upside remaining for wave 3. So long story short, if I just remove it 1 second. So basically what we are expecting is something like this. So that's our play on WTI crude oil, or expectancy on WTI crude oil, of course, not play. However, one thing which I'm finding kind of not in accordance with our expectations is the fact that this market is spending way too much time over here. Again, it could be a build up. It has just remained, if I just remove everything, you can just observe here. It has remained in this sideways movement for quite some time. It has spent way too much time here. So as I said, it could be a good thing as well as a bad thing. First good thing is that it could just be building up for a strong leg up. The more time it takes within the sideways move, the more accumulation there is and the bigger the move can be. Second thing is that our analysis is wrong and this is just forming a corrective structure here. Who knows? It could be many things. Simplest one I can think of is maybe a triangle, but we, as I said, we don't have any confirmation for it. But to remain aware of such situations, we have placed a stop loss here around, sorry, alert here around 70.452. Market goes below it, of course I will have to take out my positions, remaining positions in loss, and also then I can plan for some possible short trades. But until proven otherwise, the count remains the same. That we have a wave one here, two here, continuing complete, and the next leg up is still there remaining. So basically, still expecting a zigzag in Elliott Wave terminologies, minimum zigzag. Best case scenario, impulse. So nothing much to add here, guys. And okay, I have a question or a comment. Crude is testing patience since days now, but it is moving with the arrows. Social, it definitely is testing my patience. I actually had to take out some positions when this market was giving this sharp legs down and then get back in again. So a lot of position sizing, resizing happened. It really is testing our patience. And here is Jay with the comment. Hi Nirav, good to join your session. Well, nice to have you here, Jay, and thank you for the comment here. So with that, let's now head over to our next discussion, which will be the chart of gold. So gold, last time when we discussed the analysis, I checked before this webinar, basically suggested that we will look for short trades below a level of 2027. Now I'll have more comments on that or more to add on to it once we actually look at the recording. So let's just go to the recording. Yeah, here it is. So here's the recording of last webinar, 96th webinar, by the way. Let's check what was said on gold. Somewhere here. Yes. Okay, so the main analysis or theme was that either the C is complete here. I have, by the way, paused the webinar. I'm just moving my mouse above it. So main theme was that either the C is complete here or the C is still continuing. And basis of the second one, these arrows are basis of the C continuing analysis, which is the one which played out because we were, as you can see here, looking for shorts below 2027, which was played out in the live market. So anyways, I'll just move to the actual chart. Thing to point out here is that below 2027, we were looking for a short trade. That's basically what we were discussing in the last webinar. Now let's look at the actual chart here and where is 2027. By the way, let's actually mark the time. So we did the last discussion on 5th January, somewhere here. And 2027 is somewhere here. So somewhere here we were having the analysis suggesting downward movement. And now here's something I have to point out very clearly. First of all, when we did the discussion, our idea was that we expect from this point an A up, a B down, and a C up. That was the main theme. You can, of course, go and check it for yourselves. I don't want to play a recording for 10 minutes when I can just explain it 2 seconds. So that was the main theme, that it will go up for A, B, and C, and then it will fall. So in which scenario the 2027 would have held us, given us, not held, would have given us the maximum profits. Now, because things change dynamically, because keep in mind, Elliott Wave counts are just the representation of the various things or various ways the market can take, right? So the market keeps changing its mind based on the participants it has, fundamental news, economic news, and whatever. So on and so forth. The counts keep changing. Of course, you already know that. Otherwise, there won't be any point in doing these webinars on weekly basis. I could just plot out the counts for the whole structure of gold for hundreds of years to come, and it will keep following it, right? So one thing I'm just trying to make clear here is that these things do keep changing. And while I had pointed it out in my group, the updated counts, because we do have a private Slack group, in case you did not know, I did not care to update it. I mean, I don't update anything other than these webinars. So basically, the update was that this is the leg down, and our primary expectation was this zigzag, but here it's following the flat kind of path here, right? So I'll just go to the counts here. So this is the expectation we were following, or the count we were following in the group. Afterwards, because our main theme, which we discussed last webinar, did not really play out. So from a count perspective, we did say below 2027, we look for shorts, And yes, it did go lower, but it did not touch our targets of 2009. But yes, count wise, it is still following the bearish pattern. Now, here are a few things I have to add here, which are quite important here. First of all, we are assuming from this point of reference. Actually, let me just go back in time a little bit so that I can explain things a little bit more clearly. So, from this point of reference, we have the count or understanding on this market that one second. So, understanding from this point is that expected flat in play, A down, B up, and C down. As I discussed in the last webinar itself, C may be complete here, which leads to a completely bullish scenario. Second possibility is that C is continuing here, which means this will be just the impulse down. Now, what am I discussing here? This is a Elliott Wave analysis, basically. And within Elliott Wave analysis, we are discussing a flat pattern, right? So now this is the point of interest here, very important, because if C is complete here, where do we get the clarification for it? Actually, we don't have a very clear cut way, but I am very interested in going longs above 2083, which is basically near the last high. Why? Because at that point, it kind of becomes very clear that the bulls are holding the fort well, and it is most likely that this count is holding. Again, keep in mind there are other variations, but we don't have the time to explore those, and most people probably will not understand or be able to appreciate that anyways. So keeping things simple here, see here, and the possibility that it will go up becomes activated around 2082, let's say. Basically, this high you should note at your own charts. We are using this data feed, so if you are using a different data feed, prices may be a little bit different. Just keep that in mind. Now, for gold, as I just said, above 2082, we are extremely interested in taking longs. But what about the counter scenario? What if this C is continuing? In which case, this becomes a case of, actually, I'll just go to the shorter time frame here. Keep in mind, if the C is continuing, it will continue down as an impulse or a diagonal. Both cases, it will have 5 waves within it. So for that discussion, let's take this as our point of reference and consider this as an impulse continuing in the downward direction, in which case this becomes a possible 2, and this is now forming possibilities of a possible 4 and 5. Now, in case you did not know what an impulse looks like, it basically is a structure which looks roughly like this. First leg down is called a 1, upward movement is called a 2, then a 3, then a 4, and a 5. Right. So in this case, we have already completed the 2. That's the main theme here. And it actually is at a kind of an important level, because if this really is the 2, we expect this trend line to be held. So it's currently testing it. So probably we have to wait 3-4 hours to see what comes out. Sometimes the market will give a false break, a spike above the trend line, maybe 1 or 2 candles above the trend line, and then reverse. So we gotta account for that. Cannot be very rigid with these things, right? Now, yeah, as I was saying, if the market is still 1 down, 2 up, and this is still forming for forming what you call starting a pattern for the downward movement, I should say, then this count holds. This basically the arrow holds. That is, this market will test this trend line over here and reverse from here, right? And this makes it interesting, because if this really does happen, that the bearish count plays out, which I'll be interested in taking shorts around 2023, 2024, let's say. So if this does play out, then the downside is open up for quite substantial level, right? We'll check the targets after a few points further. So just keep in mind that if it takes S&P, right? We'll check it in a moment. So as I was saying, if it does take out the low 2024, then I am interested in shorts. If it sustains above this trend line, then the bearish possibility becomes weaker and weaker and kind of goes extinct, right? Because sustenance above this trend line suggests that this is not a 2. Or if it's a 2, then it's still continuing. What do I mean by that? That basically means that maybe it is still continuing like a WXY. right? So that's one more possibility that we have to count for. But long story short, it doesn't really matter which possibility you count it as. The market will likely go up and at least take out this high 2088 and then go even further up and possibly just go for new highs as well, new lifetime highs, I mean. Right. So that's why I had mentioned in the webinar's title, open for possibly open for more downside. So yes, concluding the discussion, possibility of more downside becomes active at 2024, below 2024, I should say. Upside, while we wait for the market to sustain above this trend line, that basically means waiting for at least two candles to sustain above this. And actually, the best way to see or get confirmation that this market is actually going to go up will be that the market goes up and then take support at this trend line in a corrective manner, right? First, what I'll do is I'll just try and reduce the size of this thing. Yeah, that's better. Yes. So as I was saying, was the best scenario would be that the market goes up and then goes down in three waves, like an A down, B up, and C down. That is the corrective formation in Elliott Wave terminologies. And the C wave takes support at the trend line. That is basically the best way to confirm these things. But generally, these things may or may not happen. And even if they do happen, you have to be a little bit too patient for these things, right? So, but anyways, that's about all for the discussion on gold here. I'll just make that trend line here. Personally, see, I think the bullish possibility is becoming stronger because it does not look like a flat, because in that case it will become an expanded one. Expanded one, yes, it can become expanded, but that is actually not the most common theme. Anyways, we'll wait for it to take out this 2067 or at least give some more sustenance above the trend line. All right, so that's about it for our discussion on gold. I have discussed the downside possibility and upside, the trend line importance, and new highs. We were interested in also looking at the targets. So first we'll look at the upside targets because we have already marked them here at 2168 is the immediate one. But again, keep in mind, if it takes out the lifetime high, I think 2168 is too conservative. It will go up a lot more. And this brings us to our next immediate target, 2224. So these are all coming from longer time frame analysis. As you can see, these lines expand back in time. So these are the upside targets, 2168, 2224. On the downside, as I said, below this level of 2022, we'll look for bearish possibilities. We have also marked the targets 1938 followed by much lower levels. We'll just consider the minimum possibility 1938 and mark it here. So that's about it for our analysis on gold. I don't think there's much more discussion needed here. Just move on to S&P from here. Seems to have missed a question here from Hari. Can we expect an up move today in crude? Let me see. Well, I'm already holding long, so of course I will be nice. But from a count perspective, let's see. It has opened up the possibility of a diagonal here, maybe. Let me see here. Too much penetration below the line. Well, from a count perspective, what I'm seeing here is that this market is probably going for a nested structure here. Getting back to a quick discussion on WTI. But the problem here comes in that if this really is a flat incoming, then C can be big, right? So I wouldn't comment that it can go up today. Only thing I'm seeing good on the bullish side is that it is sort of holding the last high. This level, you can see these 2 points we have here and then third point here. So it's holding that level quite well and it's taking some support here, buying waves or buying orders, buy orders, limit buy or whatever is coming in here so far. But anyway, so yeah, I cannot comment about its movement for today because from short term perspective, I can see that there is one leg down or the possibility of one leg down still remaining. But at the same time, it could be just complete here and can just fly from here. So that's about that. Let's now head over to our discussion on S&P's 500 case. C down or C complete. So I should hold some longs. 1 second, guys. What I'll do is I'll quickly add some longs on S&P and then we'll continue our discussion. Euro and crude both are in profit. And let's add for S&P as well. Done. So yes, yeah. Now let's have a look at what we are thinking of S&P. First of all, I just added some longs, so I have to relegate the bearish counts, which we will do as soon as we look at the last chart discussion on S&P's 500, which was done around somewhere here. So this was the last chart discussion on S&P. Very interesting to note that we were able to again pinpoint the exact nature of the move here on S&P, right? So as you can see in the last discussion, I'm basically pointing out that this is the wave below. I have just paused the discussion. This is the 96th webinar, the last weekly discussion we had. So I'm basically suggesting that the market should go up first before taking a down move again, or dive down again. So as you can see here, let me just play the video again. So yes, up and then down. Now let's look at the actual chart and see how it performed on the actual chart. It actually did perform precisely. So this is the time we discussed the market last time, here somewhere here, because this low was already made and we discussed it on 5th January, right? So the analysis was basically that this is the A down and this is the flat for B. And once the B is complete, we'll see a down leg for C. Now the expectancy was that the B will complete somewhere here and then the C will go like this. But it did go up a little bit deeper and looks like the C is complete already here. That's why I added longs. So now, not only did the last analysis play out precisely because we were able to capture the upside as well. I mean, I did take trades on the upside here, which were posted in the group. But anyways, the long story short is that the count is precisely playing out, and this is the updated count. I'll just update it on the live chart. 1 second. I'll remove the bearish possibility. And this becomes our updated analysis here. So basically, we are thinking that this could be the one up. Come on, go there. Yes, like this. The two down here could also be considered alternate view here, that this is the two, right? Both things are possible here. And in both these cases, this means that it should now head up for further upward movement, right? So that's the expectancy on S&P now. Let me see on a higher time frame analysis if there is something to point out here. Not really. We had some bearish discussions, projections, etc., etc. And on the higher time frame, we seem to be having an immediate resistance, but it's actually already at the immediate resistance level, which we have marked. Yes, so count wise, the next immediate target is what is this? Actually, it is 4809. Yeah, I know it's right there, but that is the target we have had for a long time, and the market has gone near it, come back, gone near it, come back. You can look at it. We had projected this. I don't know when I discussed it in live webinar, but this was projected based on longer time frame count. So, anyways, this is a level of importance here. That's why the market has gone there, and as you can see, waited 1, 2, 3, and this will be the fourth time. Right, so that's about that for S&P's upside move. And the count wise, you should not bother yourselves, because if it really does break out this level of 4809, then there isn't much of a need for targets. It can just shoot up extremely high, because it will then be looking into uncharted territories basically. So it kind of becomes a trade where you want to just trail the, what do you call, stop losses, right? Instead of chasing targets, just trail the stop losses and let the market chase the targets for you by itself, right? Or to take you out of the markets by itself. Although I believe I may have projected some targets for it. Not really on this chart. Hmm. Okay, so lifetime high is in alignment with our resistance projection as well. Yes, by the way, there are some targets here, but they are quite way up. I don't think they hold any relevance for this discussion. 5200, 13, 53, 98, or 5400. So just way too up. So we will have to look into the immediate targets and such things. I can project one thing here for the immediate target for this 3 which we are expecting is in play. So yes, these are the immediate targets. 4910 first of all, and the next incoming target we already discussed, the higher ones, is 5100. So these are the levels which we will look for possible resistance above 4800. Right, so that's about that for S&P. But as I said, this is kind of the market where you want to trail the thing instead of focusing on targets. Right, Prashant has a comment here. Let's check that. So practical entry exit formula explains, sir. So there is no formula I use, Prashant. It's just that I operate mostly on the feelings I get or the gut feel I get after doing the analysis, or sometimes without doing the analysis. In this case, it's not even required. It kind of already is at the near lifetime high, and the count seemed to be suggesting more bullishness. So I entered longs based on the count, which I just explained. Last thing I just want to point out, in case the market goes around 4767, then these longs I'll have to exit at once and reconsider the situation again. Right. So yeah, that's about it for our discussion on S&P. I don't have much to add here. Upside we have discussed, and downside invalidation level also we have discussed. Let's now head over to our next chart of Nifty 50. And yes, guys, before we head over to the next chart, I have a request to make here. If you are liking the content, please make sure to hit the like button. If you are new here, kindly subscribe. And much more importantly, make sure you share this content once the webinar is complete with your friends and colleagues who are into trading, because we definitely need more views, and more views are only possible if the YouTube algorithm promotes our content, which is only possible if you share the link. So for sharing the link, what you can do is go to the live webinar, or basically the webinar you're currently watching, go scroll below it and click on the share button here, right? And you can paste the link that way. Or if you want to refer people to the website, then you can check the link for the 97th webinar. It will be posted after the webinar is complete over here, and then open the link here, and then you can just copy the URL and paste it on your social media, Twitter, Facebook, LinkedIn, whatever you are using. And if you have access to some groups of traders, then just share it there, right? If they allow sharing such content. But kindly make sure that you do share the content. And I would appreciate if you can at least share it with 5 people in your circle. That helps a lot, because that by that it increases the reach by a lot. And do keep in mind, we are also streaming it live on LinkedIn, and this is the LinkedIn link in case you want to connect here. You can just follow me here using this link. All right. So it's that being said, here's Silver. I don't follow Silver Prashant, and I don't intend to cover it in these webinars. So yes, guys, as I said, kindly do your part and share the content. Let's now head over to our next discussion, which will be the chart of Nifty 50. Right. It's loaded on screen. I remember very clearly that in our last discussion, what I said was that we need to wait for S&P's movement, and then that same movement is expected in Nifty's counter, right? And that is actually the case here, right? We did see S&P's movement being followed up by Nifty, but now look at Nifty for what it is worth. Like, what are we expecting out of this? So this is the update here. So in Nifty, what we are really expecting here is what I should say is that again a kind of a follow up with S&P. So since we are already looking at bullish activity on S&P, we expect the market will also give us bullish movement in Nifty counter. What that basically means is that our immediate resistance, which is coming at 21,980, should be taken out, right? That's our primary understanding on this counter. The 21,980 level should be taken out to the upside. Give me a moment here. Let me just check something. Yes. So as I was saying, 21,980 level should be taken to the upside if the bullish activity persists, and then the market may see a small correction, but that is not really required, given that we are seeing a rally all around. Nikkei is also making new lifetime highs since the last sessions. I think last to last session also it was making new lifetime high. So I think 3 consecutive sessions it has had with new lifetime highs. So if S&P takes out the high, then it will be an rally in multiple different indices. So basis on that, I am under the impression that 21980, if it sustains above it for a few, um, I cannot specifically say the time period, but if it sustains above it, then we expect the rally to just continue to the upside and major bull activity to follow. But if it not cannot do that, then some correction may be expected here. The idea being that either this correction, which started at this point of reference around 21,830 on 1st January, is either complete already here, right? And the market continues up. And if not complete already here, then it's just continuing like this. That's why 21980 we need to watch out first, right? Let me see. We have projections for further upward movement. Not right now, but we do have a trend line resistance which is coming. Let me just project the targets for it. Trend line resistance suggesting 22,060 and then higher levels. Plus. So these are the main two levels to watch out for: 21,060 plus and 2198. 3 or 4. Right. So that's about it for Nifty. Again, same activity as in S&P we are expecting, and overall looking like a bullish ascent is still in this counter. Right. Lastly, let's now head over to our chart of BTC or Bitcoin. Yeah, by the way, one thing I wanted to point out, including our discussions of last webinar, Euro worked out as we discussed in the last webinar, crude oil, gold, and S&P. Nifty, we never had a clear bias. We were always looking to wait for S&P's movement or S&P to give us the lead. So I wouldn't say much about Nifty in that regard. But BTC also performed. So overall, we discussed 6 things in the last webinar, and 5 of them played out as we have already seen. We'll see the last one on BTC in a few moments. So 5 of them played out of the 6 discussions we did. And that's all for free webinar content. I'm not even talking about the private group or anything. Right. So if you appreciate this high value content which I'm bringing to you guys, I would like to request you again to kindly make sure that you like, and not only like, but share the content and spread the word. If you can do that, then we can have a little bit more following. Then that would mean more quality content to come. All right, guys. So basically, long story short, more quality content coming to this channel basically is a factor of you guys sharing it, which I haven't seen much of yet. Right. So I'm still requesting you. We are almost near the 100th webinar. So a lot of hours and hours of effort has gone into it. So your appreciation towards the hard work is required at this point. Right. With that being said, let's now head over to our last discussion here. BTC. So let's quickly have a look at what we were saying about BTC in the last webinar's discussion. So this is our BTC chart, and I'll just play the video for a bit. So these are the main projections we had, but basically the theme was, as you can see over here, I'll just maximize it to full screen. So basic theme over here on BTC was that we were looking for the market to take out this level marked by the yellow number 45421 to the upside. And if it does take out, the immediate target would have been 45480. So this was a very short term kind of analysis. I wouldn't say we had much of anything substantial planned here, right? But overall, what we were thinking in BTC was that we wait for 45421 and then plan for further upside movements. What happened over the course of the week was that we were able to spot diagonal here in BTC. And actually, as a matter of fact, we did. Let me just remove this thing for a bit. So we did catch this diagonal here, as I can show you here on 10th January post here. We suggested the probability of diagonal continuation around the price of 45897. These are all Slack private posts. Further on, the market then went down, and then we suggested that it will now go up for taking out this high of wave 3 circle degree, and then the market went up, as you can expect. Right? Not only did it go up, now we are expecting a move below the yellow trend line. Sorry. Right. So it basically followed all the analysis that we did. All of it was posted live, of course, in the Slack group, as you can see here. Right. Now, what are we thinking? So now let's head over to the chart. So as you already saw in the Slack post, we are thinking down, up and down, basically an ABC move. But to be very clear, the whole thing can be complete just with a move below the trend line, right? So basically what I'm saying is that once the market goes below the trend line, it can then take off from here. Although the general expectation is that it will go and sustain a little bit like an ABC, like this. But the minimum is to go below the trend line, which is complete once the market goes below this yellow trend line and then can go up. So this brings us the last possibility. The possibility is that this fifth can be complete here, which can lead to not just a move below the trend line, but a further fall, right? And the second possibility is that this fifth is still continuing, and that brings us the possibility that this is just the one of the five and the two of the five, and then this is following up for the three of the five, right? So like that, this market can just be following up for a or building up for a much bigger move. Which one is it going to play out? We currently don't know, but what we do know is from a short-term perspective, we are expecting some bearish movement, which, as you can see, I have already pointed out with the arrow. Once this bearish movement has proceeded, we'll see the strength of this move and how it touches the targets or it does not touch the target. And based on that, we will determine the further course of action for this market, right? So that is about that for our discussion on BTC. And hopefully you guys enjoyed the discussion. And as I requested, do make sure to share this content. And I'm seeing one of the guys has written comments and then retracted. Guys, don't do stuff like this. If you are posting comments, post them and don't delete. What is this? 4 or 5 comments are retracted. Right? If I see that again, I will have to block it because I don't know what kind of activity is going on here. So then you won't be able to post anything. Anyways, so thank you guys for staying till the end, and hopefully you enjoyed the content. Make sure you hit the like if you did enjoy it, and share it, as I said. And I'll see you guys in the next one. And hi, Heyman. Nice to see you back again in the webinar. All right, guys, I'll see you guys in the next one, and take care.